Mark Selby, Chair and CEO of Canada Nickel, advancing the Crawford Nickel Sulphide project and unlocking the Timmins Nickel District.
Unlocking the Timmins single-handedly, I'm sure.
Well, no, there's actually a little bit of a team going on now, which is great.
I know. Look, I want to catch up with you because we spoke when we were face-to-face in Cape Town.
Yep.
And now we're face-to-face in London. It's a habit for me, isn't it? But the thing I want to pick you up on, right? So
Sure.
when we spoke in Cape Town, you just announced the Anglo deal,
Yep.
which is great.
Yep.
Nice group to have on the share register. But you also then followed up with a bought deal, which I didn't know was on the cards.
Right.
Where did that come from?
Yeah, so we announced a 20 million bought deal. The evening after we announced the Anglo deal. The key piece there is you take money when it's available. Again, we're in ongoing discussions. You always want to be ready to tap the market when the market's there. Again, we didn't know what the institutional reaction to the Anglo deal was going to be. We assumed it was favorable, but remember at that time, Putin was talking about lobbying, going nuclear and amping up the war in Ukraine. We had a bunch of additional economic uncertainty coming to the table, and what that trajectory was going to look like. So, when you had an ability to raise another $20 million at the same price that Anglo-American just paid between the combination, it just made a lot of sense to get the money in the bank now. That keeps us through till early 2024. By that point, we expect to have one or more offtake agreements. And the way we've been, looking at structuring with the battery supply chain of the car makers is they may have an upfront payment on signing, and then they're going to write a big check when we have to make a construction decision. So, for us, it gives us the leverage in all those discussions over the next year because we don't need any money until early next year.
Mark? Because we talked about, you said we don't need any more money.
Yeah.
Right? You said that.
Yeah.
Right?
Yeah.
So people don't know how to read you as a result.
Right.
Right.
Yep.
So I get the take it while it's there conversation.
Yeah.
Lots of the companies who did that last year took it, then were hauled across the coals for it, and now they look like geniuses.
Yeah.
Why should we look at you now and go, that was a smart move? I'll take it when it's there.
Yeah.
But wasn't it expensive?
No, I mean, we raised, so if you look back at when we've raised money, so again, you always want to be ready to be in a position to get capital when it's available at a good price. So, just over a year ago, we raised money when the LME froze. Share prices moved higher. There's a lot of investor interest in nickel, and so we were able to raise, $50 million. The second piece of it, again, too, off the back of the Anglo deal, which is, the first major mining company endorsement of one of these big bulk tonnage projects. Again, we're able to raise money, at the same price that we did, effectively the same price we did for the Anglo deal. The key thing is raising capital is then what you do with it, right? So, with the first tranche, we've got the feasibility study through, we've launched the permitting, we are several steps ahead of most of the other major projects there, who haven't even started the permitting process and haven't even started something that starts, with a feasibility study at this point in time. This capital that we just raised, is going to allow us to complete the feasibility study, is going to allow us to advance permitting dramatically. It's going to allow us to step around our regional properties where we've announced a whole series of excellent results over the last few months. And so again, can I get 1 times, 2 times, 3 times, 5 times value on that money? Absolutely.
Okay. Well, you need to deliver that, right? So
yeah.
The feasibility study isn't here yet. So timing on that was what?
Yeah, it's going to be mid this year.
Mid this year.
Yeah.
Okay. And in the Q2 or there.
Yeah, thereabouts. Yeah.
Okay. We've then got to work out how do we value this company. Without between now and then, we've got to value this company in some way, sense, or form. There's a few deals happening out there at the moment. I just saw Mincor hit the headlines again. What does that inform us at all about where you could be?
Again, it's another great data point. In the market, we've seen most of the nickel sulfide projects that have been around for more than 10 years have all been acquired. In the last 18 months, we've seen the 2 sort of standalone nickel producers. So Western Areas got acquired by Independence Group, a short while ago. Even in today's market downturn, Mincor was trading at about $1.50 before Christmas time, traded up to $1.80 mid-January. And like all of us, we've seen our share prices come off because of all the economic uncertainty. They were $1.04 2 days ago, and Wailu's made a cash offer at $1.40 a share, which values them, at over $500 million US, which is equivalent to over $1 US a pound per pound of nickel resource that they have in the ground.
Wow.
So for a company like us, that's going to have a couple billion pounds or more of resource in the mine plan, that's a fantastic number and a fantastic benchmark for us in terms of, again, what ultimately the value of this company could be.
Okay, so we'll go away and take a look at what the Mincor deal looks like and the reasons why, and maybe if there's a comp to be drawn there for sure. Okay, so mid-year, get it.
Yeah.
You've got the money now to kind of get you there.
Yeah.
Where do you take this thing out to? Because I've just looked at the announcement on Reed. Obviously,
Yeah.
Again, more pounds.
Yeah.
You're delivering on that front, and this thing's going to get to be quite a hefty size. So, in terms of economic studies, how do you handle that on each of the? You've got a bunch of assets now, right?
Yeah.
So there's a lot of work, a lot of money
Yeah.
to be spent. So how are you coming at it?
Yeah, so the key thing is really around just unlocking the exploration potential of each of the properties, because that, at the end of the day, as I said before, we want to be in a position so that if a hostile bid does come over, we've demonstrated that, not only Crawford is could be a mine, that there's the potential for all of these other deposits we have, to demonstrate that they have the resource potential, that we think exists at Crawford. So Crawford, again, pushing it forward, so feasibility study, advancing the permitting, on track for permitting by mid-2025, and we're about a third of the way through the permitting process, and haven't hit any roadblocks at this point. And again, we expect to continue to advance that pretty dramatically. We put Scotia and Deutsche Bank in as equity project advisors. We're just about to appoint a project debt advisor. So again, we're going to put, to be able to start putting the financing plan together. And again, people like Scotia and Deutsche Bank don't get up, unless they know there's a pretty good chance they're going to get a check at the end of it. So, I think, they're involved because they see that, the quality of the project, the quality of the team, and, where we are, that, that there's a good chance that we're going to be able to get the equity portion of the project together. The debt project advisors have been courting us for 2 years because, again, they see the potential of Crawford in this environment. When we get to the rest of the assets, so the one piece to the puzzle that we added recently was Texmont. That's a small, high grade, near-term production potential. And what that gives us, because it was a past producer, because it's will be an open pit that comes to surface, and we're going to start small scale. We believe, we'll have to see if the drilling comes through, and so far it's all looked pretty good. Is that we'll be able to get that to a point where we can bring that into production by 2025 with a relatively low amount of capital, to start getting nickel pounds into the market.
But that's over and above the money that you've raised at the moment. The money you've raised at the moment is to get the feasibility study done, Crawford up to a point where it's attractive to strategic, right?
Right. No, and then we also raised $6 million in flow through. Which will allow us to drill off Texmont and then do some of and that's targeted for the other regional exploration at this point in time.
Yeah, but okay, so here's the important thing for people to understand.
Yeah.
Is the picture you're building here, because you've got Crawford, you've got Reed, and you've got a bunch of other assets which could match those, right?
Yep.
Those things need funding, and those things happen over a time frame. And I'm interested in, where do you release or capture the value? Do you say, right, I'm going to get strategic, take Crawford so far, get strategic in, bump that off. Now I'm going to focus on Reed, do this cookie cutter, right? Same
Rinse,
thing.
repeat.
And then I got 12 others or whatever. And do the same thing. Because this is a big region you're talking about, a regional play. And most people come in here, juniors, that talk to me about regional plays. They couldn't deliver it if you gave them a roadmap. Right?
Yeah.
Why is it going to be different with you?
Because our team, was successful taking Dumont from resource stage through to fully permitted construction ready. We've taken Crawford, in less than 4 years from the 5th drill hole through to, 1/3 permitted, 1/3 down the permitting path, and, well on to the feasibility study, which is about 1/3 to 1/2 of the time that people would take for a fraction of the capital that most people would take to get there. And because we have sort of the geological templates in place that we've been able to successfully do. And then I think the big thing with the Reed announcement that we put out last week was we just took the same flow sheet, that mineral processing flow sheet that we took for Crawford. We took some Reed samples. Again, we took some higher grade, higher serpentinized just to see how well it worked. And it worked really well. We delivered 46% nickel concentrate with over half of it, grading 60% nickel, which is about the highest test that we've done so far in all the material that we've done in ore body. So the fact that we've now developed this template with Crawford, We'll just take those templates, apply them to these other projects, we'll make these other projects happen even faster and cheaper than we've done with Crawford, but we won't spend big amounts of capital on them until we get full value for Crawford, or we'll look for other ways to finance that are non-dilutive to Crawford to be able to get that money going. We can bring partners in, we can raise money specifically for those assets, that don't dilute our current shareholders' exposure to Crawford.
That's what I'm kind of getting at is because if you kind of conflate the activities with the same budget, nothing finishes, right? So you referenced Dumont there, right?
Yeah.
That thing's still out for sale there, and I don't know whether it's a case of Waterstone looking for too much money, or technically no one believes in it, or what's going on there. But I'm more interested in how you get these monetization events, these value capture moments for your shareholders over time, or at least hand it over to someone else at some point, where your shareholders benefit. So there's a clear roadmap as far as you're concerned.
Yes. 100%. Yeah.
Right.
Yeah.
And it starts with Crawford.
Yeah.
So funded through to the delivery of the
full feasibility study and into early 2024. So that gets us
strategic partner by the end of this year is the hope.
Yeah. No, offtake partner. Yeah.
Offtake.
Yeah, we've got our strategic with Anglo.
Anglo. What percentage is that?
9.9%.
9.9. So there's room for others.
There is. There could be.
Competitive tension mark.
Yes.
So it's really about offtake that you're looking for then, which kind of gives you prediction of future cash flows. Okay.
Because what we'll need to do for Crawford, basically, between early 2024 and a construction decision in 2025, there's the remaining amount of permitting work that needs to be done. There'll be detail engineering that you would like to do to be able to hit the ground running in mid 2025. The good thing is that's relatively scalable based on the financing that's available. This year is the heavy work for permitting because you have to file what's called your environmental impact statement, and that's where you need to do a pile of test work. You pay engineering firms to interpret all that test work and put it into the forms and stuff that the government agencies who are reviewing the material for the permit can digest, and you get binders worth of documentation that gets generated. So this is the big spend year for the permitting process. The amount of capital we'll need for that final 18 months is the stuff that we'd need to spend on is relatively small. And so again, quite confident that one of these offtake guys, based on the increased pace of discussions that we're having, is we'll have one or more of those in place before year end, which will give us that check, to take us through.
Okay, so there's a few things running in my head at the moment. So I'm looking at Mincore. If I look at that comp there, it was £2 billion. That's quite a big number.
$1 a pound,
Right, $1 a pound. Sorry.
I've got the $2 billion.
It is really how the capex on a project like this gets done, right? So I spoke to a company earlier in the week, coal company. Now they've got a few limitations around, obviously, with ESG and anti-fossil fuel rhetoric going around in terms of access to funding, which would have been available, isn't available. But he said, "Don't you worry, Matt, because I've got industry partners with big balance sheets who don't care about that sort of stuff.
Right.
They just want access. Chinese, Indians, Japanese, Koreans want access to what we've got, met coal. Right?
Yeah.
For you guys, perhaps you don't have some of the anti-rhetoric, maybe anti-mining like everyone does, but there's no sort of negative sentiment there. But there is a big capex number attached to this thing, right?
Yeah.
So obviously Anglo's aboard. They've got a big balance sheet.
Yeah.
Whoever the offtake partner is, presumably they're going to have a decent sized balance sheet.
Yeah.
But for you, how do you play that competitive tension thing with whoever it is going to come in here with a ton of money to actually do this thing? Are there enough buyers out there at the moment in the current climate?
That is 100% why we got Scotia and Deutsche Bank on board in October, November. It was very clear that there would be an easy way to create a bunch of tension. If I could just do it on my own and there was one or two people to do it, there's no sense paying someone, they're paying their fee to get involved in that. But there is so much demand now from all of the auto OEMs who realize, there's very few nickel projects that can come on by the latter part of this decade. There's even fewer nickel projects that can deliver low to zero carbon nickel that they'd love to have by the latter part of this decade. And what's interesting is within the battery supply chain, all of the components of it want to be the one who actually controls the material. So you have the precursor maker, you have the cathode maker, you have the battery maker, and the OEM, and they all want to be the person who owns owns
that part of the value chain.
owns there's the one that delivers the metal to whoever needs to get it. And so each one of them is interested because they're making billion-dollar investments on plant capacity to process that raw material that shows up. So again, to end up writing a several $100 million check as part of their overall shift into the EV market, is something, that's still, something that is definitely within the realm of their balance sheets. And again, in this environment, in the EV space, all of the governments that are involved, whether it's Korea, Japan, the United States, Europe, there's a range of funding capacity that can help enable those companies that they need to use their balance sheet, but it'll be guaranteed, or it'll be some additional incentives provided by, an export agency or some other government agency that'll help, make it easier for them to spend the capital to get what they need. So again, this is one of these unique moments in the metals market. I think you'd probably have to go back to World War II, to see as much government interest in getting raw materials to wherever they need to get to.
Yeah, good analogy.
Yeah.
Good analogy. Then. Yeah, again, we've been talking to a company earlier this week. They've got their own autoclave, but they can't fill it. So they've had to decommission it.
Right.
So therefore, it's a case of, to get that thing back up and running is now $300 million. But that's not the painful part. The painful part is the fact that that whole supply chain downstream from that it can't be filled.
Yeah.
So so the knock-on effect is great, and I can see why governments and why OEMs and battery manufacturers are getting involved in this thing. Right. So you've been clear about your portfolio of assets.
Yep.
This little outlier of this high grade, get into production, cheap, quickly.
Yep.
I know we've had the conversation previously about why you would bother getting distracted by something so small.
Yep.
Remind me again.
Yeah, because it gives us a chance to get 3,000 to 5,000 tons of nickel on the market by 2025. Each one of those players, as much as small as that number is, they're desperate to get additional material in that time frame. So that allows us to gives us another leg up on someone else who's got just a project that's going to come at some point in the future. From a CapEx perspective, it'll be relatively small. We can use contractors to do it. So in terms of the amount of CapEx you need to deploy it, it'll be a relatively low CapEx option to get there. And in terms of management attention, because again, we don't want to get diverted, we're going to deliver a resource and then an initial PA. And then during that PA process, if it's clear that this project is going to go forward, we'll bring a team in. So we'll have Team Crawford, and again, it won't be a big team. It'll be a couple of people, who can then work through and make sure we're able to get Texmont permitted, get the right engineering study done. So again, we can, get shovel in the ground if the numbers work, by early part of 2025.
Okay. Nickel market looks a bit painful at the moment.
Yeah, so we're going through what I call the great convergence.
Right.
Talked about at the beginning of the year that LME prices are high. We've seen massive discounts on everything intermediate. Fundamentally, there's nickel pig iron can't be exported from China, and that creates that big gap. But what I said, by the end of the year, we're going to see LME prices lower than where they would be relative to where we're starting, and we'll see those discounts compress. And so what's amazing, I thought it was going to take 6 to 8 months to do that, but we're already on the nickel sulfate side, where the discounts were like 20% below the LME price, when we last talked at the end of January, they're now down to 3%, which is where I expect them to be. Sulfate will trade at a premium from time to time, but I think you'll see going forward, just like cobalt sulfate, nickel sulfate trade at a small discount to the nickel price going forward. So that gap's already there. On the NPI side, stainless is a little bit sluggish in China still. So the gap has closed. It hasn't quite closed as much, but again, I think in another 3 or 4 months we'll see that all resolved. And again, even with the big drop in nickel prices, we're still trading over $10 a pound, and we use $7.75 for our PEA. We'll use a higher number for our feasibility study, but there's a lot of room between $7.75 and today's quote low nickel price.
For sure. And just finish off on a news. In the UK, the news, British TV used to finish on a light-hearted story. So this is my equivalent of that. It's like, did you read the story about the LME? And finding, instead of nickel, they found effectively a big bag of rocks.
Yes.
That's quite fun.
Yes, yeah.
Just when we think things can get anything worse.
Yeah. We're going to send a little picture to the LME. Yeah. Which of these is nickel and not nickel, just so they can tell it as it goes into the warehouse. So.
Too funny.
Yeah.
Too funny. Anyway, Mike, thanks for coming in. Good
Nope,
to see
great
you
to see you,
London,
sir.
and we'll catch up with you soon.
For sure.